Oh, sorry, there we go. My bad, I had it muted on accident. Yeah, so what's going on, guys? As the title says, Bears are in control. Just an FYI, I gotta jam out of here before 12. I got tenant coming by to look at one of the properties, so I gotta jam here in just a bit. So we'll do a little review and things like that, as we normally do. Maybe if we're lucky, we'll see a couple things that make sense. So yeah, we'll just start with, and in Brendan, you said bounce is really not holding today. Feels very worrisome with econ data as well. Yeah, I mean, obviously markets always kind of do as they please. We had a good bounce, and obviously it's kind of sold off there on the day. And is it a surprise? Nah, not really. And again, markets can always do as they please, but the reality is we are below the 50 SMA, so naturally we're in a macro bearish environment. So obviously, if the macro bearish environment is correct, then obviously bounces would fail. So, and I guess it's always kind of a catch-22 because it's like, well, when the market's ready to reverse, a bounce will keep going thing. But yeah, we're in a bearish market for the moment. And that bearish market actually happened. I think it was the last day I was streaming with you guys. We were talking about it. So right about there, we'll go back to that area on the chart. So yeah, we'll dial this down a bit, but yeah, right here where I dried this nice little yellow line, that's where the market entered bearish. I think it was last Wednesday or this Wednesday. Wait, yeah, Wednesday. Yeah, so it was Wednesday. Yeah, Wednesday. Anyway, so on Wednesday, the market flipped below 50 SMA. So obviously, macro environment becomes bearish there. So we're downsided. So me, Brandon, our private group, we all started with kind of some counter long bias ideas for the day, then flipped to bearish. Not that the market wasn't already bearish, it's just in the morning there was reasons to be long bias kind of leading into the open. Then once the open happens, we have a gap down. Market internals are bearish. Initial trend is down, so you're kind of looking at downside tactics. So we'll go back to Wednesday to the sell signal, then kind of lead into today. So we'll go to like a 5-minute chart real quick. So pretty much once the market, right here, I'll put a little yellow box right there. So that's when the market finally gave up the 50 SMA on Wednesday. And as you can see, if you look at the chart pattern too, you could see, whether you want to call it a head and shoulders, right? So we're kind of upsided, and then the market rolls over. It holds the 50 SMA, and then as the 50 SMA calculates, yada yada, it becomes a green line. You can see we break down, and then it becomes a bearish market, right? So that right there, where I'm circling, is where the market flipped to the negative side, and now we're in a downtrending motion. All right. So once that happens, then we have Wednesday, then we have Thursday off. We come into this morning. What happens? We get a gap down, right? So when you have a gap down, I'm normally always looking at an SPX target to the downside of at least 161. Today we've fallen much further than that. Just kind of is what it is. So today we have a gap down, so we're going to run the gap tactic, which is basically fibbing the overnight gap from the open to the previous day's close, with the first downside target always being the 161. I think it was, what day was it? Yeah, it was this day. So on Wednesday, the last day I was kind of around, you can see on this day we actually failed that move. We got close, but we failed it. So you can see on this day of Wednesday, when we kind of went into a sell move later in the day, we had a gap up, right? So on that day, I was like, all right, guys, we got to first look to the 161. And so that would be like right there. Sorry, it's being weird. Okay, there we go. And you can see we actually shied it on that day. We got close, right? Market pushed up, but ended up failing to go to 161. And that can happen. But anyways, again, whenever there's a gap up, always looking at SPX to go to the 161. It almost seems like it's just algorithms that are programmed to do so in a way. But either way. So we go into a sell move on Wednesday, right around there. And as a result, we come into today. We have a gap down, so we're going to look down towards 161. All right. Now let's get into, we're going to go into a SPY chart here. I'm going to take this off, not really needed for the moment. I'm just going to clean up a lot of this for the moment. All right. So as we said, we get a gap down. Obviously, that's probably built off the back of data coming out, and then the result being, negative, or at least the market's using it as negative. So we have a gap down. So like I said, first things first, you're going for that gap 161. We do that. Right here, I'm going to highlight this move. So this move will be highlighted in a box. That was, to me, the first kind of directional trend pick for the day on the 1-minute scale, right? Market starts 1, 2, doesn't matter, just market's going down, right? And that right there is enough kind of trend for me to start deploying the 1 minute tactics, right? So we're always kind of looking at the opening candle, start, and then obviously where the trend kind of starts to develop. So let me take off some of this other stuff here. So go with me, right? So Wednesday, late afternoon, we get below the 50 SMA. That's a sell move. Today we open, we have data that snaps the market down. That creates a gap down. So then we run a gap down fib tactic, which then tells us to look down to 161. Then the market opens up, sells down, right? It starts to pick some at least kind of micro 1 minute downtrending formation. So we start anchoring to the start of the open, which you can see here, those green VWAPs. And the first kind of top that starts a relatively decent trend direction. So then we're going to look for counter trend retraces in and then continuation down. Now, that's not always the case. Sometimes that wouldn't work and, the market would pop up to here and it would reverse, right? But again, just the story goes, since you're in a bearish market, you're pulling bearish tactics down, it's a gap down. So we're anchoring to highs and then we're looking for trend down, right? Hence, when the market opens, it does this. It goes down, then it kind of goes up, but then it goes a couple candles this way. So it's starting to pick at least a tempting trend that way. So here's your first counter retrace back into your lower high volume weighted average price, down, then data down, right? So we've been anchoring down and things like that. So there's some other things involved there too, but I mean, that's pretty much it. We're just kind of watching the market kind of swing to the downside. And then from there, again, you're just kind of anchoring every preceding high. So you can see we get a lower high here. We anchor to that high, and that kind of gives us the next lower high development and then down. And then eventually we kind of do this like little V reversal thing and the market ends up going up, right? And now we're just kind of doing whatever we're doing now. So that's kind of that. Obviously, if the market's bearish and going down, naturally volatility is going to be on the upside. So if we come in here, look at the 30-minute chart for the volatility index, you will see this is even back from a couple days ago. Remember a couple days ago, we're like, hey, the volatility index is, that was on Tuesday, so Tuesday to Wednesday. So either way, right, on Tuesday of last week, or this week, Tuesday of this week, look at the volatility index did what? It broke up and went into an uptrend. So on Tuesday, before the market entered a sell move, right, Wednesday, the market entered a sell signal. But on Tuesday, the volatility index entered a buy signal. So if you think about how the market has come to what it is today, starting from the beginning of the week on Tuesday, volatility index goes, actually rephrase that. Starting on Tuesday, you wake up, market opens. The market is not yet in a sell signal, but the volatility index enters a buy signal. All right, so then it raises the question. Why is the market not in a sell signal, but the VIX has now entered a buy signal? Is it the volatility index preceding what's going to come in the market, which would then be a sell signal? So is volatility implying bearishness, which that's what the volatility index does. It's implied volatility, implying the volatility can pick up. On Tuesday, the implied volatility enters a buy signal. So the volatility index is signaling to those that know or pay attention close enough that, hey, just as a reminder, I'm Mr. Volatility Index, and I'm starting to get positive. Be mindful of that. Then on Wednesday, the market goes into a sell signal. So hindsight 2020, when you look back at things, you would say, yes, the Volatility Index did its job, and it signaled on Tuesday that the market may well go into a sell signal because the Volatility Index is entering a buy signal. So one day ahead of time, you were signaled on the volatility index to be careful that, hey, the market could go into a sell signal, which then happened midday or like maybe late afternoon on Wednesday. And so then what happens, right? So then Wednesday, the market enters a sell signal. Thursday, what happens? The data comes out pre-market, slams the market, right? So did the volatility index know? Well, clearly it did, right? Sometimes the volatility index is wrong. It's not always right, but on Tuesday it said, hey, just so you know, we're entering an uptrend. This could cause some bearishness, and if it's totally correct, then yeah, the market's probably going to go into a sell signal, right? So Tuesday, VIX buy signal. Wednesday, market sell signal. Friday, data comes out poor in pre-market, slams the market, makes a gap down, run gap down tactics. Initial trend to start the day is bearish, run 1 minute micro bearish trend tactics, etc. That's the storyline from Tuesday. All right. And yeah, I mean, that's pretty much it. That's how the market did. That's what the market's done. That's what the market was saying a couple days ago. That's how it happened. That's the development. That's pretty much it. Cheers. Yep. So now what's the story? Now the story is going to be the market is bearish until it's not. So when the market enters a buy signal or when the volatility index enters a sell signal, then the market's just bearish. Now, while the market is bearish in a sell signal, that doesn't mean it can't bounce. I mean, look at what just happened, right? We just had what? We just had a huge bounce on the day. Look at this huge bounce on the day that it just sold right off. Could it have kept going? Yes. Did it? No, right? So again, just because you're in a sell move doesn't mean there's not going to be long bias moves. Or just like this morning, just because data came out bad and we're in a sell move doesn't mean we're not looking at long bias moves to start into the morning of the day, right? There's trends within trends, but the macro environment is bearish, right? If you're someone who's swing trading or you want to be long bias, obviously, as the story goes, it's always easier to be long bias in a long bias environment, which we're not currently. If we were in a buy signal, it would be more likely that, say, like this bounce would just keep going because we're in a buy move, but we're not. So the story is right now the macro environment is bearish, which means you can have counter bounces, but you're not macro bullish. And until that changes, it hasn't. And when it changes, what's going to happen? The market's going to flip the 50 SMA. Or the VIX is going to flip to 50 SMA. The VIX could go into a sell signal prior to the market going into a buy signal, just like we saw. The VIX went into a buy signal prior to the market going into a sell signal. Whatever way it wants to happen in is completely fine. But one thing is always true, that if the market is in a buy signal and it's legit, then generally the volatility index should be down or going down. Just as if the volatility index is entering a buy signal and it's legit, then you would assume the market does go down and that it should enter a sell signal. So everything that's happened since Tuesday and into Friday has been, in my opinion, 100% legitimate. It makes perfect sense. I think the market has performed exactly as it should. There's nothing that has happened that isn't understandable or doesn't make sense. Market's doing exactly as it should do, and it's performing perfect. There's nothing odd. Usually there isn't. Yeah, so thumbs up. 11:21. Got a little bit of time. Let's see. Yeah, kind of missed that. Yeah. Didn't want to do that. So anyways, good morning, you guys. Or yeah, it's still a morning. Yeah, good morning. All those things. Good jam. Yeah, I mean, market's kind of, I don't know. We've already had a lot of movement. It's 11 o'clock. But yeah, I mean, we're just going through a little bit of a 30-minute low bounce right here. Market doesn't look great. Might get a little bit of love to the upside here. I mean, we already kind of did. This was the most recent support I had, which was 579.75, that I think was worthy. But yeah. And again, we kind of kind of shied a lot of stuff on the way down, some wicks. I don't think we're gonna get really great bounces even off this low or just in general, but could be totally wrong, right? Like right now, 1 minute retrace levels are back down to that yellow box on the bottom. So obviously, this long press doesn't just randomly build a higher low here. It just falls right back down to that yellow box on the bottom. Bitcoin doing? I did have some targets back up on Bitcoin, but then we got whatever that was. It's kind of shrugging it off. You know, but I mean, we got some targets. Yeah, I think I got them all set up here. Yeah, I mean, pretty much this yellow box on the bottom to this next yellow box. Those are kind of our bigger targets on the downside. Right now, our counter bounce targets on the upside back to lower highs are right here and here. So pretty much these are my two boxes. I really don't care about anything in the middle of this. Really, these are the 2 price points here, here, or down here and down here. So everything in between really doesn't matter to me. But those are the 2 kind of focal points. Either we're counter trend longing back to here, then to attempt another daily chart kind of lower high scenario, or eventually maybe we actually break this price action structure and then we basically sell down to like the 86K mark. I still feel like it's easier to hold support first, then bounce up to create another lower high before we'd even really attempt breaking that stuff. But yeah, that's what I'm looking at there. Shout out from Puerto Rico. Thanks, gringo guy. I appreciate that. Thank you, sir. Same scenario here, guys, right? You know, whenever you see yellow boxes on my chart, that pretty much just means areas I think the market's going to go to, or targeting, right? And yeah, I know when you see a couple like this, you could be like, well, that's kind of confusing. You got some on the upside, you got some on the downside, and I mean, that's just kind of how it works. The market goes to and from supply and demand. And whatever's in the middle is who gets chopped out, you know? So like everyone kind of like buying in these red candles or whatever, the demand's down here, arguably. Not that it has to be, right? But you can see how we just sold right down there. That's why anyone basically buying here, it's like, yeah, I mean, if you're lucky and it keeps going up, great. If not, you get washed to there. So it's pretty straightforward stuff, you know? Hence, that's the same thing that I'm saying about Bitcoin here, right? When we kind of look at this this daily scale, right? Think about what just happened on the 1 minute with the SPY there. It's the same thing, right? Anyone who's shorting down here runs the risk of getting blown out back up to here. Vice versa, if the counter long fails, then obviously everyone buying in this area could run, their risk is down to here, and if we actually break support down to there, right? So it's like my focal points are generally never where the price action's currently at, but where the price action can go, right? Because markets are forward looking. Bring this back. Oh, hello. And I mean, yeah, that's pretty much all we got for that. All right, we're taking out the 1 minute, so you can see how we broke that 1 minute, right? So now just remove that, and now we're gonna repeat something here, and now we're gonna look on the top, right? So now everyone that's chasing this short down, right, this short going down with it, they are arguably at some point, and it doesn't always work perfect, but their risk is going to be all the way back up to that yellow box, right? So it's like if someone shorts this low, and it doesn't have to bounce right now, it could, you know, I'm just saying, just in general, right? You know, they run themselves the risk that it's all the way back up to there, right? Because markets don't go in straight lines. 1 second. The markets don't go in straight lines. They bounce and then down. All right? And on the micro scale, the supply side would be up here right now. So if you run down and then you bounce up. And the only time we would change that is if a false bottom is put in. So like this was a green candle. They tried to run it green and then everyone who bought that just got stopped out. So arguably I will anchor this because I know the market tried to reverse that green and it failed. So that would become like a new spot for me to anchor to. But anyways, we're kind of getting the thick of it there. And then you see how it's come down. So right now the box is it's right here. So that's another thing is my targets are ever evolving and updating and always moving. They're not static. So then obviously this would be right here. All right, so you see how the green candle attempted and then failed. So we're just going to move this guy down to there now, right? And so now it's going to be like this because we know not everyone, but whoever tried to buy that dip and it fails and it washes out. And also this green line right there, that's a breakdown of the 30-minute volume weighted average price structure. So, not that it has to do that every time, but I just, So anyways, now that we have a green candle there, it's a false one. So now we're going to look there. So you have, arguably a couple ideas here now. So when the market kind of goes through its little micro counter bounce, we would no longer be looking up to this top box for now. We'd be looking here because everyone that bought that dip is now stopped out. So think about if you bought a candle or if you buy and then stop out, you're going to be very thankful to get back to break even, right? So that's why we transition that anchor piece down a bit because obviously everyone who was long either stopped out or may still be holding, and if it comes back and gets close, they're probably going to stop. They're going to take off, right? So we'll track that volume weighted average price of that low buy that fit. Huh. So we didn't quite get the live tag, but again, you can we obviously got that first initial, but that's like nothing, right? Because it's just like right there. But ultimately, you can see where did that market pop to? About right there, right? So pretty straightforward. So remember, we're saying everyone who is chasing the short down, they run the risk of what? Getting popped back to where? There. Remember, it was up here, but markets evolve, so now it's here. And now look at where that 1 minute lower high red candle has come in, right? So they see it going down, they see it going down, they see it going down. They chase, pops it back, then down. Remember, markets don't move in straight lines. What do? They go down, then they go up, then they go down, and then they go up if you're lower high. So that is the attempted micro 1 minute lower high. I do. Yes, I do remember Matrix. Long time ago. Been a long time. So pretty much now what we're going to do. So now we would anchor here. I'm going to take this guy. Even though it wasn't a live tag, it's good enough. So now we're going to go like this. And we'll do it like that. And now this is going to be our kind of retrace area. Milan, how's it going? Hello, friend. Hello. No, oh, that's funny. Your name is Mr. Poots. No. You don't YOLO put super far of the money. If you're going to do that, you need to enter those puts when the market starts to enter a sell signal, or your best bet would be on the counter retrace to the 50 SMA volume weighted average price of the sell signal, or the 10 SMA volume weighted average price of the sell signal, which has already occurred. And that occurred, I will show you, I will tell you, and we got to move this down to about right there now. We're going to go to a 30-minute. We'll go to about this. All right, ready? So here's a couple tactics. So ready? The box, that's the sell signal, right? The sell signal is just the market breaking down the 50 SMA and blah, 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 right? So what's the volume weighted average price of that move? Volume weighted average price, I'm going to do right here, anchor there, and the 50 SMA breakdown, which is about right there. Which this one isn't super clean, so we'll just go with the 10 SMA one. But you can see here, I am anchored to the 10 SMA break. And that might have worked during, hold on one second, extended hours. Yeah, pretty close, right? So if you look, the breakdown is where this box is at. The arrow points to the volume weighted average price of the 10 SMA breakdown that eventually triggers into the sell signal. Therefore, the volume weighted average price of the sell move counter retrace would be right there, which is the last highest point before the roll. Okay? So if you're like, you want to YOLO puts, your lowest risk probability, where premiums and everything would be cheap and in your favor for puts, would be as the market is bouncing. Puts are obviously decreasing, so they're cheaper to buy, cheaper to buy, cheaper to buy. So as it's bouncing back into volume weighted average price resistance of the current sell signal volume weighted average price, you'd be short. And then you wake up today and data comes out and you'd be mega rich. You're not loading puts down here. Why? Because puts are going to be juiced up because the market has gone down. Not only that, when the market goes into sell signals, the market already knows. So if the market goes into a sell signal, the premiums are going to instantly flip because the market knows, right? If the market's bearish, the premiums are higher. Therefore, so you see what I'm saying? Yeah. This is horrible. Margin calls soon. I mean, maybe I guess I wouldn't really know about the margin calls scenarios. And I mean, this isn't really that bad. I mean, let's just take a look for a second. Market has been straight up for about 2 years now, right? This was 23, so 23 to whatever it is, 23, it's a year and a half. So I mean, market's been pretty straight up. So this is all pretty normal. Not to mention the market is in a sell signal, so it's doing exactly as it should. So again, there's nothing that's happening right now that isn't understood. It all makes perfect sense. Is it bad? No. It's just normal, right? It's just normal stuff. I don't have a TradingView Pine script. I just manually do all this stuff. And I kind of like doing it manually because, again, that's not entirely true. Someone wrote a script for me, but I could just never get it to work right, and probably didn't spend enough time trying to get it to work right. But I kind of do like manually doing it because I think there's also some edge there. Because, like, obviously, if you put it into a script, there could be certain scenarios where manual could work better, but either way, I would still love to have something that manually does all this for me. So one day I'm sure I'll get there, or maybe I won't because I'm lazy. I appreciate it, Bernard. But yeah, again, we are in a sell move, and honestly, I was actually looking at markets maybe even getting down to here next. 1 second. I'm kind of expecting, expectations can always be wrong, but, eventually they'll be right. So we're just basically looking for markets to even sell down into, like, here right now, I think. So, like, 575.55 to 573.55, somewhere in that area, I think is totally respectable to get to. And whether that be today, tomorrow, whatever, if the sell signal persists or whatever, and my levels are correct, we'll just basically sell down into 575 right into these areas, and then this will be a nice little area to watch for some scalp longs, if not a bigger long that develops into a day or so. But yeah, so that's kind of always the jam. It's like, you got all these support levels ideas, and it's like, You want the market to go there, but the market could very easily not go there, then enter a long signal. So that's another thing to remember, right? Like, so say I make a YouTube video, I'm like, oh, like market's gonna go here, or this is where support's at. Let's just say this is where support's at, because this is right. This is a big support area, right? So that's a big support area. But let's say the market just bottoms and reverses. Well, if the market bottoms, it reverses, and then it goes into a buy signal, then we're just into a buy signal. It's not that the support was wrong. It just means that A, the market didn't get there, and the market is now bullish. So you're would be ignorant to be like, oh, well, it didn't hit my support, so can't be long. Well, no, because the market goes to and from buy signals. Support is just support. The market listens to buy signals, right? So this would be an oversold support within a sell signal. So if the sell signal persists and gets to the support, this could very well reverse it into a buy signal. But if there's another support that the market has that it wants, and mine is wrong, or we just don't get there, that's completely fine. And the market will tell you that when it goes into a buy signal. So again, the market can pick any resistance it wants. It can pick any support it wants. You can find resistance and support in a numerous amounts of different ways. And you will have it right, or it will hit your level and it will work this time. It will hit your level, it won't work that time, or whatever, right? Because support is support and resistance is resistance, and that can be found anywhere. But one thing that does not change is the uptrend, downtrend motion of the market, right? Supports create bottoms. Resistances create tops. If the resistance or the support is strong enough, it will reverse the trend of the market. The trend of the market starts to reverse fully when it enters a buy signal or sell signal and the trend changes. So support and resistance is for trying to determine overbought and oversold. And that has nothing to do with trend, right? Therefore, anybody's support could be correct, anybody's resistances could be correct, okay? Or wrong. And again, as things are selling off, yeah, you want to find a support. But you don't know when you hit that support if that support is going to be strong enough. And yeah, you could look at momentum, and you could look at MACD, or you could look at RSI, but those still will not tell you if that support is strong enough to bounce it and then turn it into a buy signal, all right? The only thing that can do that is the trend. When the trend is positive, you're positive. You have no idea ahead of time if the support that you have in mind is going to be strong enough to bottom it, A, then B, reverse it into a buy signal. Okay? So yeah, that's that. So that's what I was getting at, is like, you know, as someone who posts about analysis and talks about these things, right? It's like, unless you know the full story, you could be like, oh, this guy's an idiot, right? He said this was support. And yeah, maybe it bounced, but then we just went down. It's like, yeah, this was support, but we're in a sell move. All right? So yeah, that's it. Or vice versa, you could think, oh, this is support. And then it just like dies off. It's like, clearly the support was not strong enough to reverse the current sell signal we're in. So if you know that the market is macro bearish, then you know that every support you pick, it's just an oversold potential support idea, right? And that's that, you know? Tom, it's on the buy signal is derived from the open, high, low, close chart. So no pre-market, no after hours data, and it's on a 30-minute time frame. It does not matter the day that you set your chart to. 10 days, 30 days, 100 days, the SMA calculation is the same. So, yeah. Yeah. Oh, let me get back into here. All right, well, that's about all the time I got to spend. I got to clean up and get ready to go. So, yeah, I'll leave you guys with that. Hopefully you guys had a good day. Yeah, cheers. And, yeah, I'll catch you back probably, no, not tomorrow. Tomorrow's Saturday. So I'll catch you back next week at some point. You guys take care. Have a good day, and I'll see you next week.